Hello, ladies and gentlemen. My name is Elise Vennik, and I welcome you today on Tallinna Vesi's webinar. The webinar will be hosted by the Chairman of the Board, Karl Heino Brookes, and Chief Financial Officer, Riina. Firstly, Karl Heino Brookes and Riina will introduce Tallinna Vesi's operational and financial results. Right after the presentation, we will open the floor for questions. I invite you to use the question box on the right-hand side of the screen to send questions. All questions will be answered after the presentations. Now, I will give it over to Karl Heino Brookes and Riina, please.
Thank you, Elise. Good morning, everyone. Thank you very much for joining the Q4 webinar, 2017 webinar today. As usual, I'll start with a brief update on operational results during 2017. In summary, the operational performance of AS Tallinna Vesi in 2017 was excellent. During the year, tap water remained high and we had a 99.93% compliance amongst the 2,973 samples taken from across our network and within customers' premises. It is also encouraging that over 75% of people in Tallinn are now drinking tap water when asked in surveys. Water losses in the distribution network have reached an all-time lowest level, and the year ended with 13.8% leakage in the network. This is a testament to our investment programme, the speed at which we repair bursts in the network, and the effectiveness of our maintenance regimes. Tallinna Vesi's customer satisfaction levels continue to be good across all sectors, with overall ratings between 88 and 92 points, which compares favourably to the European average of 65 points. Final treated effluent leaving our treatment plant at Baltic was also fully compliant with the water permit parameters, resulting in no increased pollution tax charges. Amongst our staff, safe performance remains high and the engagement in line with the European average. Moving on to the tariff dispute. Sadly, on the 12th of December 2017, the Supreme Court rejected the company's cassation in relation to the ongoing tariff dispute. This means that the company is now bound by the Competition Authority and at the end of February this year must submit its tariff application to the authority in accordance with their guidelines. Following the submission, a period of further discussions will take place, and we're expecting that a new tariff will come into force somewhere in Q2 or Q3 of 2018, subject to the discussions and negotiations. This preparation of the tariff is currently in progress, and as of today, we're unable to give any clear indication as to the overall effect on the company's profitability going forwards. So, moving on to the international arbitration. As I'm sure you're all aware that in parallel with the local court case, the international arbitration proceedings are being held via the International Centre for Settlement of Investment Disputes. After years of trying to negotiate a solution, the Supervisory Council of Tallinna Vesi decided to commence international arbitration proceedings against the Republic of Estonia for breach of the bilateral investment treaty between the Netherlands and the Republic of Estonia. The hearings were held in Paris in November of 2016. These hearings were broadcast on the ICSID website, and also I think links can still be found on our investment website if anybody's interested in actually looking at the videos from the hearings. Both parties submitted their post-hearing briefs in February of last year, and the decision is expected from the arbitration panel sometime in the first half of 2018. This process remains ongoing, and of course we'll update investors section of the company's website as and when there are any significant developments. I'm now going to pass you over to Riina, who will take you through the financial results in detail for last year. Thank you.
Thank you, Karl, and good morning to everyone. Now I would like to give you the overview of the financial performance of Tallinna Vesi in 2017. After financial highlights, I will give a more detailed overview about sales and costs. The performance of the group continues to be good and stable. Total sales revenue were 1.4% or 0.83 million euros higher than in 2016. It came from the water supply and wastewater disposal services sales, which increased by 2.1% or 1.04 million euros. Stormwater and fire hydrant service revenues has been relatively flat year on year, and there has been a slight decline of 4.9% or 0.22 million euros in pipe construction and asphalting services. The gross profit in 2017 was higher by 2.5% or 0.83 million euros compared to 2016. The gross profit was impacted by higher water, sewage and stormwater services revenues and construction and asphalting related profit, accompanied by lower depreciation costs. At the same time, there was some increases in chemical, electricity, staff and other costs. In 2017, the operating profit was 13.76 million euros lower than in 2016. The decrease was mostly affected by the provision for possible third-party claims, which will be covered later in the presentation. Higher costs were balanced by lower tariff dispute-related costs. Compared to 2016, the net profit of the company was 11.17 million euros lower. In addition to the changes mentioned before, it was balanced by lower net financial expenses. Now let's move on to the next slides, and I will comment on the changes in revenues and expenses a bit closer. Let's start from the sales. Total sales revenues for the fourth quarter of 2017 increased by 10% or 1.45 million euros. Total revenues from water and wastewater services were by 2.6% or 0.34 million euros higher than in the fourth quarter of 2016, amounting to 13.1 million euros. As we operated with the frozen tariffs, the change in revenues was solely driven by the consumption. As a result of the negative decision from the Supreme Court in the company's tariffs, the company's tariffs will be regulated in the future based on competition authorities' methodology. As Karl mentioned earlier, the company will submit its tariff application by the end of February this year, and the new tariff will be applied after competition authority has reviewed and approved it. The domestic consumption from Tallinn and Sau area increased compared to the same period in 2016 by 1% or 74,000 cubic meters to 7.4 million cubic meters. There was also a small increase of 0.7% or 17,000 cubic meters in commercial sector consumption, which amounted to 2.6 million cubic meters. As also in earlier quarters this year, the increase in domestic sector came mainly from apartment blocks, which is our biggest customer group. The consumption in apartment blocks increased by 1.4%, whilst the consumption in other private client groups decreased. In commercial sector, the growth came mainly from other commercial customer sector, balanced by the decrease in industry and leisure sectors. Total volumes from outside service area increased by 20.3% to 1.33 million euros compared to the comparative period in 2016. The water and wastewater volumes were higher by 10.5% or 118,000 cubic meters. It was accompanied by 3 times higher stormwater volumes compared to the fourth quarter in 2016. Stormwater volumes from the main service area were also higher by 44.6%. Although cumulatively the revenues from construction services and asphalting services were lower than in 2016, then in the fourth quarter those revenues were 95% or 0.73 million euros higher than in the fourth quarter of 2016. This now takes us to the costs. The total cost of goods sold in the fourth quarter of 2017 was higher by 14.4% or 0.9 million euros, amounting to 7.2 million euros. Direct main production costs were higher by 12.2% or 207,000 euros. Higher chemicals, electricity and pollution tax expenses were balanced by lower water abstraction charges. Water abstraction charges decreased by 7.2% to 0.3 million euros, and it was driven by 4.3% decrease in water volumes. Chemical costs were higher by 19.3% or 65,000 euros, mainly due to higher methanol price and usage of coagulant in wastewater treatment process. It was accompanied slightly by higher usage of different chemicals in water treatment process as a result of poor raw quality. Electricity costs were higher by 3.7% or 30,000 euros due to the higher treated wastewater volumes balanced by lower electricity prices. Pollution tax expense increased by 56.5% or 135,000 euros, mainly due to higher treated wastewater volumes and pollution load of pollutants. Construction and asphalting services cost increase is related to higher construction and asphalting services revenues mentioned earlier. Decrease in administrative cost is mostly affected by lower dispute-related legal costs. Legal costs still will continue to affect the administrative costs up to the end of the international dispute, the amount of which is dependent on work that needs to be put into this dispute. Higher net other expenses have been affected by potential liability provision of third-party claims. And as mentioned before, on 12th of December 2017, the Supreme Court made a decision on Aktsiaseltsi Tallinna Vesi's cassation in the tariff dispute with the Estonian Competition Authority. The court stated that the Competition Authority is not bound by the agreement on the water tariffs contained in the services agreement, which was executed upon privatization between the company and the city of Tallinn. From now on, the tariffs will be regulated by the Competition Authority in line with the methodology reflecting the Competition Authority's interpretation of the law. According to the law, the tariffs established by the city of Tallinn are in force until the Competition Authority approves the new tariffs, and the company has implemented these tariffs in line with the law. The company has acted in good faith and in reliance on promises by the previous regulator. Thus, the company doesn't consider itself liable to the customers for any claims related to the tariffs applied until the new tariffs approved by the Competition Authority are duly implemented. The potential undiscounted payments by the company in the future, if customer claims are to be recognized by the courts, amounts to 44 million euros. This estimate marks the maximum difference between the tariffs established by the city of Tallinn and those tariffs as estimated by the company based on our current best understanding of the Competition Authority's methodology over the last 3 years. The management board of the company has assessed the potential liability resulting from such claims, if successful, to be 17.5 million euros. If such liability materializes, the company may seek to increase its damages claim against the Republic of Estonia in the ongoing exit arbitration or initiating a new exit arbitration. The company will monitor the situation and thus may adjust the relevant provision on the rolling basis. Net financial expenses have mostly been affected by the non-monetary revaluation of fair value of the swap, having the negative net expense of 0.3 million euros year on year. It now takes us to cash flows. The cash position as of 31st of December 2017 is strong. The company's cash balance stood at 44.97 million euros, forming 19.7% of the total assets. Compared to the end of fourth quarter in 2016, the cash balance has increased by 11 million euros. The biggest contribution to the cash flows comes from the main operations. The company's collection of receivables continues to be high, being 99.83% on average. In 12 months of 2017, net cash flows from investing activities resulted in a cash outflow of 6.99 million euros compared to the cash outflow of 11.44 million euros in the comparative period in 2016. The investments into fixed assets were lower by 4.8 million euros and the compensation for pipes were lower by 0.3 million euros. Biggest investments in 2016 were related to Tehase Collector, which was finalized by the end of 2016. In 2017, also the biggest investments are related to pipe reconstructions and different investments to treatment facilities. Financing cash flows resulted in net outflow of 15.3 million euros, being lower by 9 million euros compared to 2016. The financing cash flows were impacted by lower dividend payments of 7.2 million euros and related income tax. That concludes the overview of financial performance for the fourth quarter in 2017. Thank you.
Thank you, Riina and Karl, for the presentation. We will now proceed with the questions. So everybody, please, if you wish to ask something, use the question box on the right-hand side of your screens to submit the questions. We will give you a few minutes and then we will answer all of the questions in the order they are received. Thank you. Okay, so we already have one question that was submitted by Natalia Stepukova beforehand, and she is asking when will the decision regarding dividends or changing the dividend policy will be made. So I'm giving it over now to Karl Heino Brookes to answer the question, please.
Okay, firstly, thank you for the question. In terms of dividends discussion and approval, that's something for later in this year. It will be this topic of discussions at the next and subsequent supervisory council meetings, which are in March and in April, and then it'll be taken forward to the AGM later this year. So it's not something we're currently discussing at this moment in time.
Thank you. Everybody else who wants to ask a question, please write them in the box. We have two other questions already submitted, so moving on to the next one. What was the methodology on the basis of which the 17.5 million euro charge related to past difference in tariffs derived from the 44 million total potential exposure? Please, Riina, could you answer the question Nauris Persins has asked?
Thank you for the question. We have been recognizing the contingent liability for several years now for those people who have been following us. And the contingent liability has been always there, covering the potential possible third-party claims that might come. And that is the difference between the frozen tariffs that has been charged to the clients based on actually confirmed and approved tariffs by the City of Tallinn in 2010, and the approximate calculation based on our understanding of competition authorities' methodology, which is the assumption. As regards to the provision for possible claims, that is part of this contingent liability. If you are reading the note 5, you see that we still have got this contingent liability of undiscounted amount, and that is the amount that is effectively the assessment that not 100% of the clients will claim the money. And whether the claims are justified at all, that is the question still ongoing.
Thank you, Riina. Please, if we have any other questions, submit now on the right side box on your screen. I have another question from Nauris Persins asking what average percentage difference in tariffs was assumed when calculating 44 million total exposure. Riina will answer this question as well.
I effectively answered this question with the previous one already, as mentioned before, and as it is disclosed in the note 5 to our accounts. Then this 44 approximation takes into account 3 past years, so you can easily take the main area revenues and the difference, and you can get the percentage easily out.
Thank you, Riina. We will be waiting for a bit longer to see if we have any other questions. So please, once again, feel free to ask anything you wish by submitting the question in the question box. Okay, thank you to everybody. Seems like we do not have any other questions at the moment. So thank you for participating. Thank you for the questions. Recording of the presentation will be available in the Nasdaq Baltic YouTube channel webinar playlist very shortly, and the presentation materials and reports can also be found on Tallinna Vesi's webpage. Karl, Heino, Brookes and Riina, thank you once again for the overview, and thank you to all of the participants for joining. Have a good day.
Thanks everyone, and have a good day.